Hey traders, happy Tuesday everybody. Welcome to Charts and Coffee. Hope everyone is doing fantastic. Great to see you all. I see the questions streaming in already. We have some data this week. I talked about those on the Sunday Notes live show where we have CPI and PPI, and then the rest of the week is just sprinkled with FOMC speaks. So we know that when those speakers are ready to hit the airwave, what is it that we're going to be dealing with? Volatility, right? Volatility. And I think ultimately, let's just keep in mind the Federal Reserve got a green light from that non-farm payroll number to keep on with fairly aggressive rate hikes. So with that being said, let's just jump into the questions and we'll take it from there. All right, again, great to see everybody. And I'm going to get some of these charts in the background out of the way. All right. Okay, so I'm operating from the trading view charts. So and sometimes mostly the Thinkorswim charts. And every now and then, if we're looking at a volume ledge or things like that, I'll switch on over to trading view. But we're on the Thinkorswim charts. And by the way, those of you that are in the options room, futures room, day trading room, and of course, my Sector Secrets Mastery room, I have a version of this layout, this 3-panel layout, the TOPS 3-panel layout in the room drives of the membership. So the free version of some of the tools that I have running here are in there. And that includes things like my settings on the slow stochastic, the grab candles, the wave, the Darvis 2.0, as well as the trade flags for the momentum and trend. So if you haven't checked those out yet, check them out, get them on your chart. I think they'll really make a difference in terms of clarity, understanding in this environment, which is murky at best at the moment, but I think it'll help you out a lot. All right, so kicking it off with the first question here from Chris, who asked, have I ever had a futures blow past my stop? Of course. Yeah, of course. So futures trade nearly 24 hours a day. In terms of liquidity, obviously that's going to be lower before, say, 8 a.m. Eastern and after 4 p.m. Eastern, but they trade nearly 24 hours a day. However, on the weekends, we're susceptible to gaps. And we usually don't get massive ones consistently, but it can happen. And yeah, of course. Yeah, I've been trading futures for over 30 years. That's fairly inevitable. Chris, of course. Yeah, it's never fun, but it's part of the game. But it's not something that happens a lot either. So thanks for the question. All right, next up, AR inside XOP for a long call. I don't know the AR part, Tim. Maybe my coffee hasn't kicked in yet. But XOP for a long call. So if I'm taking a look at XOP, number one, I got to double check the liquidity on this particular ETF. I love XOP, maybe not at the tide level, meaning that broader ETF. We might like it a little bit better in terms of individual stocks. Right. So if you crack open the XOP, and here's the view on my multi-chart, in the lower right corner, that's range resources. That's just out of view, by the way, behind me and the question. So take a look. You've got MPC, you've got VLO, CTRA. I mean, there's a number of, so AR. Okay, sorry. Now I gotcha. Like AR. So thanks for your patience, Tim. So I like AR. But I also like Valero, CTRA. So yes to AR, but also what I would say on AR, Tim, is I don't have the historical volatility handy. I'll have to pull it up on that. The only thing that would concern me was yesterday's move outside the historical volatility. Just anecdotally, based on what I see in that small chart, I would say it probably was. And so minor low or inside day today would be preferable. Holding the wave would be preferable. But I'd also say take a look at the individual boats, the stocks that haven't, dove quite as deeply into the wave and might be holding a little bit better. But they all had pretty dramatic moves to the downside. So yes, AR inside of XOP. Yes, the synapses are finally firing. Yes, I don't have a problem with that. But take a look at some of the other double greens on that layout as well. And remember this, gang, when it comes to XOP, XOP is not a high concentration weighted ETF. So it's not uncommon that you're going to see the stocks in the top 10 change sometimes fairly dramatically throughout the course of a month or just period throughout the course of your trading those oil and gas explorer stocks. So just keep in mind they're going to shift. It's not, say, as steady as OIH or XLE. Those names are going to shift quite a bit. So keep that in mind when you're also looking at your multi-charts as well. All right, next up, hey there, student, looking at IPI. All right, thank you for telling me what it is. So I had no idea. Intrepid Potash. Okay, for a buy, the giant dip. I wouldn't call this a dip anymore, though, my friend. I would not call this a dip. I know it's just sort of a little bit of lingo and so forth, but let me get my drawing tools out here, and I'll show you what I mean. So dips cease to be sort of valid lingo for me once that happened there. So now this is really about whether or not this is an oversold support level and whether or not we can bounce off this 200 propulsion. But, same idea, right? Whether you're talking about pulling back to support or a dip, you're looking to buy into support at the bottom line. So I just want to get the dip part out because, again, dip suggests we're in a trend. But I hear you. Is there a potential buy? What are my thoughts? The closer we are to the 200 propulsion, the better. And if we can get a minor low or inside day in proximity to that level, that would be perfect. That's what I'd be looking for personally. So I do like that potential setup. But I'd also say, I don't know what IPI hangs out with, meaning what are the other stocks at IPI, what other potash stocks might IPI be lumped up with in an ETF or so forth. And then I would want to know, is this the absolute best setup amongst that group? So that's something I would just add to that conversation. Bruce, Buffett has been buying OXY. Oh, again? All right. Yesterday, pullbacks to the wave, puts it on the 2022 point of control. Okay, is this on my radar past earnings? All right, great question. So we've got here earnings on the 10th. This is kind of a similar, Bruce, I would answer this kind of similarly to what I just mentioned to student, which is if we're looking at OXY, what else is in the group with OXY that might have better structure? And that would be my main. So I don't consider this a dip into the wave. This is really more about overbought, oversold, and Darvis. And so be careful. Bullish bias for sure. I agree with you there. After the earnings, great eye. Absolutely. But I think I'd want to dive a little bit deeper into the stocks that are hanging out with OXY and just confirm that that's the best place that I could be looking for a potential buy within that group, within that industry, within that sector, within that niche, whatever it is that stock is a part of. Thanks for the question. All right, Professor Raghee, what is your take on PSON? All right. Let's see. PSO. Am I typing that in right? I don't know why it's taking so long. Let me try it on let's give Trading View a whirl. PSON. I might have spelled it wrong. Oh, let's see. There we go. PSON. Pearson. All right. So what's my thought on Pearson? Bearish EDUT ETF taking a curve short no, or wait for three blue. This is actually buy the dip. Now you might say, Rog, it just went to yellow. Only 2 sessions, 3 sessions. This is probably still in that buy the dip. And the reason I say that is, look, if we were talking about this, because this is where I like to go back in time and be really straight up with you all. Because if we were talking about this just a few days ago, double green up to here, dip, right? That would have been the dip. That would have been a dip. That would have been a dip. That would have been a dip. So we probably had about 4 opportunities to be long already, with resistance to keep an eye on in this area here. So this would probably be a zone where you're just taking a little bit of heat before you are looking for this market to come back up and move higher. That's the way I would view that. Now, if you want to wait for 4 blue grab candles in a row, I would really like to see a fifth. Great eye in terms of what you're watching for the compression. Really good stuff. I'd like to see maybe one more blue grab candle in that area. So right in here, right? And then at that point, could we get a breakout? Because the breakout would be following the trend that was. And that is my preference, a continuation. This little pause should be perceived as a higher probability continuation, as opposed to some sort of reversal. That's what. So good eye, really good eye on that one. I haven't looked in that EDUT ETF. I'll have to check that out again. But presuming that you have, best looking one, outperformer. Make sure there's liquidity on the option chain, unless you're buying the underlying. But good stuff. Good stuff. Really good questions kicking off this morning. All right, Battlehawk. Good morning. XRE. Family looks really in a buy zone. All right, let me make sure I'm pulling up the right symbol. XRE looks really in a buy zone. Am I pulling up the right symbol, Battlehawk? XLE. Okay, thank you. XLE looks to be in a buy zone. So this candle clearly is way beyond historical volatility, right? So what do we want to look at today? I'm with you. Is this in a buy zone? Probably. But this is not, right? I have bullish bias based on the trend that preceded the chop that we're in. But please know, we are absolutely in chop. So this means that I probably want to be a little bit more conservative with the zone because of the chop. And we definitely need some sort of minor low or inside day to ensure, well, not ensure, but to at least increase the probability that we're not going to keep moving lower at quite this pace, and that the bidders, the buyers, are stepping in. So would we wait till Wednesday to decide? You could be aggro today. You could, but it definitely would be an aggro position sizing. You could be aggro today, but I would say tomorrow with a minor lower inside day confirmation, likely even better. So I agree with you. Yeah, likely even better. Can we take a look at KR and Bristol Myers Squibb? Hey, there's Zion there. Kroger. So I'll tell you, Kroger is kind of part of that whole food and inflation narrative that was really looking good. Entered, paper cut. I'm done. There's a number of corners of this market that were so good for so many weeks, actually a couple of months, and they've broken, mostly attached to miners, some to metals, definitely to some of the inflation and commodity narratives. Kroger was looking good, and it's just not anymore. So I'm not interested in Kroger any longer, paper cut, and moving on. And if I were to look at Kroger with fresh eyes now, it probably would not end up on the radar, would it? BMY looks great. Pullbacks will be viable, despite that brief period in a neutral yellow trend on the JT multi. Pullbacks do look good. And whether you're looking at this on TradingView or whether you're looking at this on, here we go. Uh, there we go. On toss, I do like it. We got earnings in the background. We got earnings in the rearview mirror, and I'm definitely looking for pullback buys to pull us through. Sure, and it's actually, you think about this. This is one of the better corners of the market within the XLV. So please know, we were doing a pretty in-depth bonus session for the Sector Secrets Mastery folks yesterday. And what we were doing is talking about position sizing, risk management, the holy grail of trading. How do you allocate dollars to a particular trade? And then how do you scale in and scale out? And how do you make sure that the risk that that trade potentially presents is not exceeding an allowable figure based on your account size, right? Because all that has to be really very much specific to your account size. And one of the things that we talked about is how we would adjust our budget according to the synchronicity that a stock has to the, here we go, to, where's my XLV? There we go. To the tide. What is the boat looking like within the tide? And in this case, when the tide is choppy and a boat is strong, clearly it's a bullish relative performer, as Danaher DHR is a bearish relative performer. But when the tide is choppy, we really want to think about what could that mean to the synchronicity of the boat and tide, and does that mean we could take, right, smaller position size? So I'm good with that, but it would definitely be a smaller position size conversation. Yeah, good stuff. All right, next up is FedEx. Sure. All right, Chris asked about FedEx. Chop. It looks like so this might be, actually, Chris, this could be a candidate for a 1, 2, 3. And this is what it would look like. If you're not familiar with the 1, 2, 3 pattern, it's a Dow 1, 2, 3. Trish has put together 2, 3 different updates about Dow 1, 2, 3s over at countdowntrader.com. Check it out. And that's where we've described what this pattern is, how it moves, the environment that it needs to occur in. And that's kind of, I'm just mocking out what it could be. Yeah, now that we've gone neutral, you can start thinking about overbought, oversold, or just a flat out trend reversal, because moving lower, transitioning to neutral is the only way that I'll think about. It's not a precursor to a reversal, because that somehow suggests that's what's inevitable. It's not. But if there is an opportunity to get long, it would be on the heels of that 1, 2, 3, and then breakout. So I would keep an eye on that. In the meanwhile, I think you'll probably initially see a lot of selling pressure building up between the 55 and the volume ledge in this area, just below 220. So be aware of that as well. I think if we're sitting below 220, there still will be some traders and investors uninterested until we break those levels. All right. So thanks for the question. Thoughts on DOW for a long play? Yeah. Double green. I like it. Valid. At the money option, give yourself some time. You've got a trend on your hands. Again, Chris, just make sure that when you look at DOW within its confines of the XLI, it's probably one of the rare. Let's do this here. So when you're looking at a boat within the overall tide and you're asking yourself, do we like the way this is moving? IYT, XLI, all part of that YM-DIA conversation. If you're looking at it in that, or XLB, I mean, XLB might be another place also that Dow has some decent weighting. Take a look at that and then ask yourself, it's probably kind of a standout, I would say, Chris. So it's doing its own thing. So be aware of that. And then move forward with the knowledge that it's not moving with the tide. It's doing its own thing. It's going to have to work a lot harder. CTRA, I do like it. We have to check the option chain on this one. Good volume ledge waiting around 28 85, 28.80 in that area. Want to see an inside? Well, look where we are pre-market. I'm not going to buy it up here, right? The markets are bouncing overnight. We'll see if they can hold after the gap. But you can see here, I don't want to buy it up at 30. It's got to be closer to 28.85 or at worst around 29.5. So if we pull back to 29.5, that might be a good aggro trigger, Jalen, on that one. And again, just like that, we have run out of time. Thank you as always. Thank you as always for all your questions and being here for our Caffeinate and Dominate 20 minutes. I'm going to be heading on over to the futures room now for the open. Enjoy your day. Keep an eye on all those FOMC speakers. We have somebody scheduled, or some buddies. We have quite a few scheduled every single day this week. I've listed them in the notes for those of you that are members of the Options Futures or My Sector Secrets Mastery. Check out the notes. Check out the Hot Zone section. And gang, I'll see you tomorrow. Same time, same station. Be good to each other.